Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, July 8th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. A big week last week in terms of shifting the longer-term dynamic. The one-year bear trend discontinued with the settlement last week above 207.92. We closed above it earlier in the week on an intra-week basis, but this just clarifies the notion, the idea, the target now for 327.03, which I think is realistic based on last week's volatility. This could be, by the end of August, but I'm not expecting that. I think things will continue to ease back in terms of volatility as they're at a very heightened pace right now. But bottom line, holding above 207.92, a 3 to 5 month objective continues at 327.03. And that is the big picture. And so during the week, I guess I should mention the fact that we also settled above this meaningful rising channel top. That is a 2 or 3 month structure in itself at 239.74. That's just a minor point because the same formation on the daily chart, which I can show right here, is at 237.29. And you also have 237.98 as a 5/8 Fibonacci. That's a static level as based on the July 23 high against the April 24 low. So this area in the 237 handle is your solid pullback support. I have it as a weekly support level, but it may well contain selling through August. Bullish momentum remains clearly intact above 237.29. Solid bottom picking territory for those of you who want to get in on a long position. I'm going to say especially over the 2 to 3 week time horizon because we should continue higher. I've got 252.71 still. That contained last Friday's high. Nothing more than the low of the high from last December, but it was a significant high. That was a key reversal high. So that able to contain daily highs. I still have it as a session containment level, but be careful. We are clearly bullish above 237.29. I don't see a good reason to be a short Tesla over the 3 to 5 day time frame. You might consider playing the short side on a day trade basis at 252.71, but just know that there is an updraft now that is definitely longer term above 208.55 and secondarily above 237.29. We could quite easily push through or even open above 252.71, and if we do, I would expect 261.44 within the day. Potentially, given what's played out over the last few days, we could reach 268.94, which is this pullback high from October of 23. We came close to reaching that again in December when we put out the key reversal high. So that would probably be it for the day. But I am still holding to, what is the longer term target. That's the wrong image. Bear with me as I comb through. Here it is. 281.38. When I say longer term, I mean over the next week or two. I think it's likely. Holding above 237.29, we do have that 281 area, and that's just right about here on the chart. So you can see that we could potentially reach that by the end of this week if this market continues moving as it has. Holding above 237.29, I think this 281.38 level, which is the high settlement price that was put out, off of that, coming off that January 23 low, the high settlement price on the weekly chart is 281.38, and that likely deserves weekly containment status. In other words, can contain weekly buying pressures. It is possible we could reach that this week. I do think it's probably more like 1 to 2 weeks away. There it is here. So I have to remember this number, 281.38, and if you could imagine it on this chart, 281.38 is right about here. We should probably have that represented as a horizontal line on this chart. I'm going to call it a 1 to 2 week target right now, able to contain weekly buying pressures. But holding above 237.29, and certainly above 208.55, but holding above 237.29, this full channel extension at 299.51 in reach over the next, say, 3 to 5 weeks. If we close above 281.38 at the end of the week, we'll probably see this next week, so forth and so on. You've got a full channel extension, which is a doubling of the size or a full 100% extension of this channel top at 207.92. I use it for targeting means. It doesn't really have any inherent resistance, but the market does tend to act as such. So we could top out at 299.51, especially given the fact that it coincides this week with the 299.29 July 23 high. But I don't want to distract from the big picture, which is to say, once again, that holding above 207.92 over the next 3 to 5 months, we should see 327.03. And if we were to close over the next week or two above the 281.38 high settlement price, in other words, closing at a new high weekly settlement price following that January 23 low, we're probably 3 to 5 weeks away from reaching 327.03. So there is the very real possibility that we will see 327.03 by the end of September or sooner. But I'm going to call it 3 to 5 months. That allows the market to fall away. And if it does fall away, we do have this structure here at 237.29, as I've been mentioning, that lines up with the 5/8 Fibonacci. Holding below 252.71 does allow this area over the next day or two. So, 237.29, able to contain selling through next week, above which a secondary bullish momentum remains clearly intact. But if we close today or any day this week below 237.29, I think we've got a good July high, and we should then over the next week or two fall to 208.55, where we encounter long-term support, able to contain selling through the rest of the third quarter, possibly the rest of the year, and we can round up from here. So I say 3 to 5 months, anticipating 327.03, and that actually allows the market to fall back to 207.92 over the next few weeks, and that would still give us enough time to reach 327.03 within 3 to 5 months. But as I've been mentioning, holding above 237.29, this channel top does allow that 327 and change, by the end of September, perhaps. Is there anything else to say? I don't think so. All the charts. I hope you download this PDF file. We have it available for you to download where you can see all these charts. I don't go through all of them all the time, but they all represent, meaningful support and resistance levels. But I do clarify those important ones. And once again, I'm going to leave you with this chart here today. If you're given the opportunity to bottom pick that 237.29 to 37.98 area, that is a solid zone to buy into, really through the rest of July, and above which bullish momentum is certainly intact. 252.71 in reach quite easily again today. If we push or open above 252.71, we could potentially, by the closing bell, reach 268.94, which means we probably will, in the coming week or so, test this, what I call kind of a 2 to 3 week objective at 281.38. I think that pretty much rounds it out. I am going to once again leave you with this chart. Please click like, share, subscribe. Check out wickedstocks.com for our daily triple Q and our daily SPY analysis and the 2 stock picks we put out every week. I'll be back tomorrow, of course, with Tuesday's Tesla. You have a great day.